Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Wednesday, the 11th of November, 2009. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London, 12:30 p.m. in Bermuda. In Mexico City, it's 10:30 a.m. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our instant mail address on AOL is CATEX-TV. Of course, on this day in history, the 11th of November, at 11 minutes after the 11th hour of the 11th day of the 11th month in 1918, the guns fell silent on the Western Front during World War I, signaling an end to hostilities. And the day is known as Veterans Day in the United States. Earlier today, President Sarkozy and Chancellor Merkel, for the first time commemorating a World War I event, the two leaders of the two former combatants met on the site of the battlefield and celebrated the end of the war. The President of the United States had veterans into the White House for a breakfast meeting and is currently at Arlington National Cemetery now laying a wreath. Mr. Obama leaves tomorrow for an 8-day trip to Asia. He's visiting Japan, China, Singapore, and South Korea. So he'll be pretty busy in the next week or so. I'm sure there'll be some news coming from him. In our world, there's some other news. Here we go. Robert Benmosh, the CEO of AIG, according to the Wall Street Journal, he's told the AIG board that he wants to quit already as chief executive because of the restraints on pay imposed by the federal government. The Wall Street Journal says he told his fellow AIG directors that he was, quote, done, but he was talked into staying by them. The recent pay and bonuses review by the Obama administration's pay czar, Ken Feinberg, was a major factor. The Journal quoted an unnamed source as saying that Benmosh's frustrations, quote, hit a crescendo. Bob feels he's in an impossible situation. Benmosh has developed a reputation, says the Journal, for making provocative remarks and ruffling feathers as he seeks to achieve his goals. Mr. Benmosh should take note of the fact that the federal government rescued the company and still owns a considerable part of it. Meanwhile, 4,000 miles to the east in Switzerland, Swiss banks and insurers will have to make sure the management bonuses are dependent on the institution's long-term success. That's good, but bonuses will not be limited otherwise. This according to Switzerland's financial markets regulator, FINMA, this morning. New regulations that will apply on January 1 to Switzerland's 7 biggest banks and 5 biggest insurers will affect this, according to the agency. Quote, remuneration schemes should not create incentives to take inappropriate risks and thereby potentially damaging the stability of financial institutions. That wording should be etched in stone above the AIG entrance hallway. If they had not taken unreasonable, inappropriate risks, we wouldn't be having this discussion. On board with the same line of thought is our friend Clem Booth. Clem Booth, who is now a senior member of the Board of Management at Allianz in Munich, was speaking at a conference in Singapore the other day, and he said that insurers and reinsurers should not expect government help if they encounter problems. He was speaking during a debate on capital and the cost of capital at the Singapore International Reinsurance Congress. He said that from his personal point of view, if an underwriter failed, there should be no government support. Quote, insurers and reinsurers are quite distinct from the banking sector in terms of systemic risk. He added, I have to say, I believe it's okay for an insurance company to go bust. It does not have a major impact on society compared to the collapse of one of the mega banks. He went on to say, it's my view that if an insurer or reinsurer so heavily leverages themselves that they are no longer to meet their responsibilities, then they should be allowed to go bust. The systemic risk for the market was not an internal one, but instead the risk came externally and from the financial markets, which provided the capital to enable underwriters to do their jobs. That's what he says. He was all right up until that last point. I'm not so sure that the attraction of capital necessarily induced different behavior or aberrant behavior on the part of underwriters. Well, here's a name from the past, Equitas, LMX Spiral. Remember these words? In a landmark decision today, a UK High Court judge ruled that Berkshire Hathaway's Equitas runoff vehicle may in fact recover reinsurance losses based on model calculations of the notorious LMX spiral from Randall and Quilter reinsurers Brandywine. In his much anticipated ruling, the Judge Gross, said, quote, "I am persuaded that the models are both capable of making the transition from the general to the particular, and do go on to provide a reasonable representation of reality." Equitas's unprecedented use of an actuarial model to calculate substantial insurance payments against the respective losses was a big battleground in a 3-week trial, which was a test case for 4 arbitrations representing more than 4,000 LMX spiral-related claims that had been waiting pending the outcome. LMX participants had been waiting for a decisive ruling for quite a long time, and the consensus in many legal circles is that this ruling may restart the unwinding of the famous spiral. Indeed, the judge himself said in the judgment that he hopes the spiral will be kick-started by this ruling. Another acquisition by Willis, this is coming from the Netherlands. They've appointed a new CEO for its Dutch operation, Willis Europe. They've grabbed Nick Post from rival Aon Netherlands, where he was most recently responsible for strategic global client relationships. Based in Amsterdam, Post will report to Adam Gerard, CEO of Willis Continental Europe. Before joining Aon in 2007, Post was at ING Bank for 21 years, where he served in a variety of roles, including management director of the bank's insurance and risk consultancy. He no doubt is very well familiar with the Dutch market with that length of time at ING. Willis in the Netherlands is one of the top 10 brokers there with over 100 associates. The American stock market in New York is up about 31 points right now. We'll go to a word from our sponsors. Just looking at the wire here, and the American luxury home builder Toll Brothers, TOLL, has reported a 42% increase in luxury home orders for the last quarter. They've seen their stock now go up 16% today. So somebody has, it must be that it's non-existent bonuses that they're using for down payments on these luxury homes. If you watch this program regularly, you know that we do refer from time to time to the American Sunday night news magazine 60 Minutes. The other night, 2 nights ago, 60 Minutes had a story talking about the potential exposure of electricity power grid networks to computer hackers. And they cited an anonymous intelligence source in the U.S. intelligence community saying that, in fact, Brazil